hello everyone. So once we are entering the stage, please tell us something about yourself. So wave us if you are from the startups. Oh, no startups? Oh, yeah. So now if you are the investors, let us know something that you are here. Okay. So majority of you are from the startups. Well, we'll try to make this meeting some available tool for you, and we'll try to furnish you with certain information. But to start in an organized way, let's now try to find a definition of a fintech. So I would like to ask each of my guests about their definition, but not in a descriptive way, but by a name of one ambassador, the best company that described the entire business. Starting from Tom.
PayPal.
Marcin?
Asimo.
Well, for me, the first somehow awareness of fintech was a long time ago when M-Bank was created. For me, it was unimaginable that there may be an internet bank. For me, for the last 15 years, it is M-Bank that exemplifies fintech.
Okay, thanks. Sylwester?
I will not be original, Asimo.
Okay.
But I'm sure the bankers are very happy that you said M-Bank. It's quite unusual that you're mentioning a bank as a fintech player. Very unusual.
Yes, because but it was at that time it was completely new business model, so it was completely different approach. I observed that, and I said to myself, there is no chance that it will succeed. But yeah.
But honestly speaking, if I may, M-Bank 10 or 13 years ago it was like number 26 today. Yeah.
Okay. So now, let's imagine I have some money and I want to invest it. And well, we have many startups here, and I'm considering investing my money into the fintech startup. So Sylwester, do you think it would be a good investment, or would you recommend me to take my money and put it under the bed or into some other company, other startup?
It depends upon how risk-averse are you. But definitely, look, we decided at MCI to focus on fintech investment 3 years ago.
Okay.
It was a natural decision. We just recognized that consumer internet is getting more mature, so the next growth engine for our funds, for our rate of returns, should be definitely one of 3 segments: the fintech, IoT, and maybe big data. Yeah. We are not big data specialists. We tested IoT, and the conclusion was that adoption of the solution in B2C market will take a bit longer than expected. So we decided to focus on fintech. The other point was that we, from the past, my team at least had some background and track record in financial services. So yeah, that was a natural decision.
Are you happy with the decision?
Yeah.
Would you do this again?
Definitely, yes, we are happy.
So this is
Of course, it's hard to tell now, because being investor, you can only judge the investment once you complete an exit, but so far so good.
And you think that this is a path that an investor should walk and should try to find interesting fintech companies, because, well, it's the thing to invest now?
Look, that's an interesting question, because when we look at, if you take a look at our portfolio, we have no Polish fintech company yet. And that's an important feature. And that is also driven by the fact that was raised, I think, several times over the whole day today. It's all about innovation that is developed or launched within Polish banking sector. So as my view is as follows. We are witnesses of the first wave of the fintech companies now. So you have a quite simple business models, like companies offering online or mobile banking account. There is no need for such company in Poland. Yeah? There has no been such need for last 10 years at least. Or you have companies that are doing arbitrage, being marketplaces for deposits. Yes, using this opportunity for arbitrage between interest rate in Germany and Poland or Czech Republic or something like that.
Sylwester, I'm sorry, these are very interesting examples. Just I want now ask Piotr, because he has an investment firm that has no financial technology company in their portfolio. So Piotr, why is it like
Yes,
this?
exactly. There is a slight difference because with our first fund, we invested in 24 Polish companies, and among them there is no fintech companies, and it is and there is a reason for that. So fintech is a very difficult industry. So and the business environment today is that there is a problem to have for banks to have any service in cloud. So it is still, we are at the stage that 15 years ago cloud solutions started, or no, 20 years ago, and we have here a problem with very basic things. So the question is not how can we put data in the cloud to have it secure and so on, but simply cloud is not secure and there is a problem.
So you don't believe in this business?
No, we see the obstacles and how difficult it is. The other thing, there is a concept of death valley for startups. So the situation when startup is chasing a huge customer, an enterprise customer, and it may take forever because the startup does not have credibility, and the enterprise has its requirements. And the other element are regulations. So the businesses depend on regulations very heavily. So in my opinion, in Poland, it is very difficult. I mean, it is somehow, it is really risky to invest in financial innovations.
Okay, so I understand that there is also one of the reasons why MCI and Sylwester are investing only in foreign companies and foreign fintech, not the companies.
Not really. This is what I said. I see there is no need for simple business models in Poland. Look at FX platforms. It took like 18 months for banks to catch up, and those guys are not growing anymore. They are all flat. Yeah? And they didn't differentiate business models, going to remittance or anything like that. So I'm just waiting for the second wave of fintech startups, more on a B2B side, where Polish companies may flourish. Because they have nice environment, several banks are open to cooperate with them, and they have quite modern IT stacks, giving them the chance to cooperate with fintech companies more easily.
Okay, thanks. Marcin, you have a broad view on business. So coming back to my question, would you recommend me to invest in fintech startup? Do you think it's a long-term trend, or do you think it's like the next bubble? So it's dangerous that I will pay a lot and then my money will melt down.
As said, it does depend on the risk profile that you have, but definitely I wouldn't support the thesis that it's a bubble. We definitely do not have any evidence to prove the statement that this is a bubble. When you look at the impact, the potential disruption that the financial technology creates for the overall financial market, it's only currently estimated around 1%. So only 1% has a direct impact. When you look at the forecast which Citi has put together, they're saying that up to 2023, that will increase to 20%. So if you think about it, even like 20%, that's not really significant. It is huge, but it's not significant. So it doesn't yet create the foundation for a bubble. And we're talking about a horizon of, what is it, for like 5 years? So today we're quite far away from the bubble. The magnitude of the impact of fintech towards the financial institutions, the traditional business, is still it's still relatively contained. And we're here at an event which is putting a lot of emphasis on this particular subject, but the banking sector is actually quite strong. It is still well capitalized. They still have a few advantages and still barriers to entry. So it's definitely not a bubble. I think considering it a bubble would mean that investors are throwing money at everything, two men and a dog and a PowerPoint. We don't see that yet. We see actually quite a diligent approach from the investors, which Sylwester can attest to. Business models are being tested, are being proved, and only then do they obtain funding. So definitely not. But what I think actually happened in the industry is that finance finally started to become an exciting place to work. We had a time where finance, in a way, was a place where we didn't see that much new talent coming in. People wanted to go to e-commerce. People wanted to go to media. Finance was, in a way, those gray-haired type of guys sitting in a bank with marbles and with big branches. It wasn't really exciting. So I think a huge advantage that fintech is creating, that it's finally bringing a bit of a funkiness to a very traditional way of doing business, which is actually addressing a fundamental need that the clients have, and that need is there. If you address that need in an efficient manner, if you create a good process around it, and also if you create a good risk management model. If you look at the majority of the fintechs, these guys actually have automated to a high degree, and believe me, I co-run a company that is obsessed with risk assessment. And actually the automated risk assessments and the automated risk tools that those fintechs are developing are actually quite effective. So that would even further prove that it's not a bubble. It's actually it seems to be a sustainable business model. Okay. The question is more around how will it cooperate in the wider scheme of things.
Okay, so I'm calm down now. I'm calm now. So let's talk to Tom as an investor and former banker, investment banker. Do you have one golden rule that you could share with us how to divide good investment, a good fintech startup or fintech company from not very good, and the company that you would not recommend to invest in?
Well, I first think that it's got to be organic. You've got to have a basket of reasons that you're going to dive in and do your due diligence.
One golden rule.
So the people, you've got to believe in the people. I've seen so many failures where you think you're buying the product or the service and a patent, and it doesn't last half as long as you did your pro formas for. But if you bought the right people and you trust that they can reinvent something else or amend it along the way, then you're always going to have a viable product or service to deliver.
Mm-hmm. Okay, so I should look for a company that was developed that involves some former people from the banks or consulting firms advising to the banks, or just the people with like a good idea?
I think it really depends on what segment you're trying to follow, right? If you're trying to be purely disruptive to a service or a deliverable that a bank has done for a long time in a certain way, I think your best experience is somebody from the bank, because they've seen it on the other side. It's like in warfare, it's intelligence. So you're not asking that person to recreate what they've done, but they have intelligence that you're paying for and that you're hiring, that they know how it can be done differently and hopefully better. And that's where the intersection of technology and finance really comes in and creates a benefit for the end users, be it businesses and or consumers directly.
Okay. Sylwester, if we may ask you about your secret, about a company that you are now tracking and you are searching for, is any kind or any fintech company that you are now looking for, and maybe we have, someone from such a company here in this room.
Probably not, because I don't invest at early stage. But yes, I'm working on new investments, and what I can tell, I think it will be also a kind of response to your previous question. This is lending platform, and I decided to put on hold our decision. It's a B2B sector, because I would like to see a bit longer traction. So for marketplaces, It's all about people and other issues, usually similar to any other kind of investment. But if you have company that is taking credit risk of counterparty on its balance sheet, I would like to see a bit longer track record. And that is why I decided to put on hold investment that was almost ready at the beginning of Q4.
Well, I rather meant, a fintech of your dreams, a company that you would, dream to invest in because you think that it would, I don't know, change the world or would be a great achievement or great investment.
This is my idea. I don't know whether it's going to be materialized, but I do believe that using beacons, we can develop totally new payment environment. Let's imagine your, for instance, Apple concept store. You have only tables with devices being presented, and you can just walk in, test, have a look, and let's imagine that you would like to buy. And of course, it's a hassle to go find a cash desk. So let's take your phone, which is already being contacted by the device, seeing your interest, and getting your signals, information about the device, and you can just say, yes, I would like to buy. At the same time, I would like to pay using different methods of payment, and I would like just to decide whether I take it or would like them to ship it home. So then I walk out the store, with no discussion with the guys, chasing me around the tables. I hate that. And also there is no need for being in a queue, wasting my time. So it's just transferring online payment system, because if you enter e-commerce store, you don't go to the cash desk, you just click.
Okay.
And so if you install, for instance, beacons, you have two direction channel of marketing communication, but also payment. And you don't have to go to and search any cash desk. That's my idea, and probably Apple is the closest animal that can actually do that. Because of infrastructure in place, iOS, since I think iOS 6, Bluetooth Low Energy is supported very heavily. You cannot turn it off as a hardware solution, and probably Apple users will love that. I'm a BlackBerry user, by the way.
Okay. So as we have so many startups here in the room, so if anyone has a question how to prepare to a meeting with the investors, just give us a sign, because I think that we have here one of the most or two most famous Polish investors and people very much that could share their knowledge with you. So if you have any detailed question, because if not, I have questions about preparation to the meeting with the investors. So as I cannot see, Piotr, if you could share some advice with the startups, how they should prepare to a meeting with the investor to be valuable and to affect in a good business together?
Yes, it will be a general advice. It's not a specific advice for fintech startups. I mean, all investors make a decision based on basically three areas. The first one is the product. So what is the problem, what is the product, how the product solves this problem, whether it is defensible, so all things around that. The second area is the market. Is the market interesting? Is the market growing? Is it a big enough market? And the third is people. So it depends on the investor. Different investors put stress on different elements, and they have their own criteria. But in most cases, it is some combination of these three elements. So if a startup, in my opinion, if a startup wants to have a good conversation with the investor, it has to have arguments in these three areas that it will be a good business. If it works in all of these three areas, then the discussion starts.
Okay. Marcin, do you think that from the perspective of fintech company, is it better to have a financial investor like a private equity firm or a strategic investor, and to create some bonds and financial relation with current financial institution or an insurance company?
It's a good question. I think end of the day, it all comes down. The answer is simple. It's all about smart money these days. Liquidity is available across different stakeholders. It is a matter of choosing someone that not only gives you the cash itself, but also gives you some additional value. And that value can be embodied through different senses. You've touched on one, which is a private equity firm, which allows you to scale the business, which gives you know-how, which gives you a deep insight into the industry, and also gives you an ability to, from day one, create synergies with other companies that they might have in their portfolio. That's one approach. And there will be, of course, companies, there will be startups that formula for success makes a lot of sense. But there are also entities which do require from day one not only the advice, the know-how, but they require the scale. There are businesses that from day one need to be scaled, because that's the only way that they are able to prove that they have a working revenue model. And actually, going back to what you said that it makes sense when you do a pitch that you always have a working revenue model. I actually wouldn't agree with that. I think you don't always need to have a working revenue model, but you need to demonstrate that you're hungry and you will get to a working revenue model, and that is why you need smart money to help you to get from where you are today to it becoming really a cash cow. Why? Because there's actually many businesses that are not generating money from day one, and they don't really have a revenue model. It evolves as they scale up their ranks. So going back to your initial question, there will be instances where an insurance company or a big bank allows you to effectively move up the scale, which a private equity would not be able to do. These guys don't have the capacity to, from Monday to Tuesday, plug you into a database of clients, operating clients, to a technology interface, and also a completely new way at looking at customer behavior. So I think the answer to your question, it does depend, but the fundamental message, I think, to all of the people out there looking for money, we now live in an environment where money is a commodity that is relatively easy accessible. You need to be intelligent to use money and to find money that not only gives you the financial token, but also gives you the know-how and gives you really the ability to make a difference and differentiate yourself when you're growing the business.
So it doesn't matter who invests, as long as it's a wise guy with huge network and
a wise guy or a wise girl.
Girl,
let's be politically correct there. Yeah.
Okay. Tom, would you agree, or does it differ, the selection between financial investor and the strategic investor, depending on the stage of development of a company?
There's good strategic investors and there's bad strategic investors, and there's good silent partners and bad silent partners. I think it really, like a lot of things, it boils down to the connectivity and the relationship that and the understanding that you have with that company before you make that investment of what they're wanting from me, or on the other side for my fintech company, what I'm expecting of them. And all I can say to your previous question is, if you're looking for funding, we at Upper Left, what goes a long way is be open, be honest, and be more cynical than you are optimistic, because everybody hears people come in and how they're going to change the world. As an investor, I'd much rather hear that somebody's thought about all the pitfalls, thought about where the forks in the road are going to come up and what they're going to have to decide to do. And for me as an investor, I want to see that somebody's thought about those challenges and has an answer. And if they don't, I want them to go, well, that's what we need some help with, because here's where we're going to hit an inflection point and we need to grow, and that's where the capital and or your strategic partnerships are going to help us. That, to me, says a lot more about a startup, that they're thinking about the forward-looking, not necessarily in just a revenue sense, but what bad could happen. Mm-hmm. And to me, I much rather, band up and buy a company that's doing the more cynical thinking about what's going to happen.
Okay, so you mentioned bad investors. So who is it and how to avoid such a person? What is the red light that, or when the red light should be perceived by the startups?
Unfortunately, sometimes you just don't know. Some people don't play their hand, and if they're not super honest when you're going through the courtship, you just don't know. I think the best thing you can do is, as an investor, or like our fund when we do invest in a private startup, is cut that relationship quick. It generally doesn't get better. If somebody has shown a side that you didn't want to partner up with, then generally I've found over 2 decades that they don't change. And unless I'm going to change, then it's better to go ahead and shake hands and part ways. To answer your question, red lights would be anything that deals with dishonest or something that happened in the past that they didn't want to talk about.
Okay.
May I?
Yeah?
On strategic investors, not bad, good, but strategic ones. Strategic investors are great unless they have the control over the company. If they have the control, your startup, your company will never grow above certain size because it will be simply purchased by the strategic investor. So if a startup may have a strategic investor that has minority shares and does not have the crucial influence on the destiny of the company, it's great to have such investors. I don't know much whether it happens in fintech. In technology, it happens in case of a couple of companies. Intel is like that, Google is like that. Cisco basically is also investing in such a ways. On the other side, you have financial investors. So there are financial investors who have experience in a specific domain, and they are obviously the best ones. And there are investors who are just general investors without a knowledge of specific industry. And again, the smart money are these who have the domain expertise. So if you look for investors, take strategic ones who do not have controls, who are happy to be a minority investors, and take the financial investors who have domain expertise, and it is a perfect match.
Sylwester, I've noticed that you want to add something. So
Yes, please. Because fintech is something, it's all about something specific with respect to fintech sector. Because if you look at number of banks and number of insurance companies that decided to either establish their own CVCs, I mean corporate venturing funds, or to be LP in funds focused at fintech companies, I think proportionally there is much higher number in both sectors. Yes, and we've done an internal study on that. And honestly speaking, I think 80–90% of large banking international groups, they all have some investment vehicles, and usually they are LPs in VC funds. On opposite, insurance businesses, they would like to control more investment arm, and it's only about CVCs. So proportionally, I would say it's not about actually just being or having 1 or 2, 3 CVCs like it is in IT space. It's a wave. They see it as a part of our R&D. And also, just to add, for fintech it's a specific question because it's always about people you are working with, your investors. But I think that for some banking-related fintech companies, it is a kind of advantage to have a fund as investor, a fund who has a strong relationships with banking group. Because look, I think tomorrow will be here Ivoca, the country manager representing Ivoca, is a good example. Commerce Ventures, VC fund that is invested by, where the major LP is Commerce Bank, is investor in this company. And definitely there is a nice area when the bank can support the business with liquidity or transferring some group of customers. And that's huge advantage. So guys from sometimes entrepreneurs are also valuing that potential impact. But on the other hand, you have other funds like, I don't, also related to banking groups, and they act strictly as financial investors. So you need to actually decide, but I would say, to be quite fair, that some banking-related venture capital funds may have an advantage.
And that's a good point, because you can avoid a cultural disfit as well, and then a lot of
You
times
need
that's
to have
the
an
problem.
intermediary, which
Yes.
is the fund.
Yeah, if you use a fund rather than direct.
Yeah, but there's also one additional point to add, which actually I think a lot of the startups are not realizing, is that in such an equation, these companies are actually solving problems for the banking sector. They're solving two key problems. One, regulation. They're actually doing arbitrage. They're managing to carve out a business which is not regulated. So the bank is in huge favor to invest in such a business. A. B, what these guys are doing, they're effectively building a model for an area where the bank would not be profitable. So the bank would never enter that area. But because they can use a CVC investment into, and Ivoca is a great example where they partner in the UK with effectively covering a segment they didn't want to touch. And now, thanks to that partnership, these guys are glued together, and the bank is a beneficiary of what the startup has established. So I think it shows that in some instances, it's a paradigm shift. Actually, the power sometimes might sit on the startup side, because that startup is solving a problem that the industry is not able to solve on its own.
Okay, well, we are already after the time, but with just one word, what is the hottest investment topic that we'll discuss on the fintech conference next year, Tom?
The impact of artificial intelligence.
Marcin?
For me, it is fintech breaking into the deposit area. So fintech's moving from only servicing relatively basic needs into aggregating and building their own balance sheets, and effectively moving banks out of the funding area. I think that's an extremely exciting development, and if it goes that way, banks will really start to feel the pressure of the competition.
There was a few words, but Piotr?
It's a big topic.
I think that there will be a couple of good examples of implementation of blockchain, and something will really start moving on.
Sylwester?
I think two words, it's insurtech and B2B fintech companies.
Okay, let's hope we will meet together in a year, and then we'll check your predictions.
Yeah, that
Many
would be
thanks.
Great.
But we said in future, not that's for next year.
Oh,
Foreseeable future.
Let's start next year then.
yeah. Thanks a lot to everybody.
Thank you.
Thank you.